welcome Shan Aggarwal from Coinbase, joined by Bourgi from Cointelegraph for their fireside chat, Wall Street to Web3, the next wave of capital markets. Yeah, you're the moderator?
No, he's the moderator.
He's got one.
I know, I need
Do you want one too? Okay.
Little snug, yeah. Shan, it's great to be with you. This is my first Futurist here in Miami, but I've been to several in Toronto, so welcome.
You're sweating a little bit more.
A little bit. I'm wearing a suit, so. So, Shan, obviously, Coinbase doesn't need any introduction. It's one of the world's largest and most recognizable exchanges. Lots of trades are flown through Coinbase. Our readers at Cointelegraph, they really want to know what's happening at Coinbase. But recently, we saw an acquisition of Echo. I know that acquisitions are not new to you. You've completed over 40 of them recently, at least. Can you kind of walk me through why you decided to acquire Echo, how that came about? I know there was a lot of chatter on social media about that.
So we acquired Echo.xyz, which is the leading on-chain capital formation platform. And the rationale for us was really to make capital markets more accessible and efficient. And I think there's been a lot of conversation about tokenization and this transition of assets from living off-chain to living on blockchains. And the reason why we think that that transition will happen is that blockchains enable 24/7 more efficient transactions between counterparties. And with Echo, what we're doing is we're really looking to connect token issuers with investors to create a more efficient marketplace for primary fundraising. We've been working together with Echo for many years. Earlier this year, we ended up actually starting with a partnership. And as the conversation started going, we realized that there was a bigger opportunity for us to really accelerate this transition from capital markets to being on-chain.
Fantastic. So you touched upon tokenization and markets moving on chain. 2025, we've seen an explosion of RWAs coming on chain. Excluding stablecoins, we're over $35 billion right now in tokenized assets, money market funds, treasury products, et cetera. What do you think is driving this shift towards on-chain finance among Wall Street? Because that's really where a lot of the adoption is coming from these days. We've been talking about Wall Street coming on chain for years, but it seems like this year it's really happening. Can you just walk me through what you're seeing on the tokenization side?
I think the first catalyst is regulation. We had the Genius Act, which was passed earlier this year, that gave a very clear framework for defining payment stablecoins. And you mentioned the $35 billion figure for excluding stablecoins. Stablecoins, I think about as the first tokenized real-world asset that have really achieved mainstream scale, with now about $300 billion of on-chain supply. And now a lot of institutions are seeing the Clarity Act, which is actively being discussed and we're hopeful to see go through over the next 1 to 2 quarters, which provides a clear framework for securities and commodities and the definition of various assets and tokens as they live on chain. And I think a lot of the recent demand is a lot of those institutions pre-positioning for that transition because they see a tokenized future as a future foundation and platform for where financial assets will sit that fundamentally makes the business of banks, asset managers, exchanges, et cetera, more efficient and modernized.
Yeah, I think you touched upon my next question, but in what way is tokenization upgrading traditional capital markets? What are some examples? There's the speed, there's the efficiency. Why else are these Wall Street firms considering this technology right now?
There's speed, efficiency, cost, just by removing counterparties that are involved in this very complex web of intermediaries that are typically involved in any financial transaction. I think another one that a lot of institutions are thinking about as they think about tokenization is just broadening access to different groups of people who might not have had the ability to subscribe or participate in a fundraising round or a specific type of investment vehicle. So, you think about things like tokenized private credit, tokenized money market funds. Those cater to a crypto community that's already on chain, already a powerful force of capital. And in the future, there's many constituents outside of the US and other markets that historically have been relatively unreachable for a lot of these people.
You already touched upon the Clarity Act. We saw with the passage of Genius, it hasn't been implemented yet, but that's created a lot of activity in the market as investors and people brace for an explosion of stablecoins, right? I think Citigroup is expecting something like $4 trillion in stablecoins in circulation by 2030, compared to $310 billion today. So how do you think Clarity will, line up the ducks, and how are companies and institutions thinking about Clarity with respect to their participation in the market?
I think Clarity will just supercharge the pace of tokenization that we see in the market today. All of the smartest institutions have effectively been doing their homework for the last year to position themselves for that transition. And we saw a similar dynamic with the Genius Act, which we talked about earlier this year, or that happened earlier this year, where since the Genius Act passed, we've been totally overwhelmed with the demand from corporates and payment service providers and banks that are looking to integrate stablecoins into their payment flows. So you mentioned Citi. We recently announced a partnership with Citi to enable their stablecoin payment transactions. I think with Clarity, you'll see a similar flood of interest from more so asset managers, banks that deal in securities and other various types of financial assets.
No, it's fascinating. You talked about the interest post Genius, or since Genius has been agreed to. Do you expect that the future is going to be more along the lines of these private companies issuing their own stable coins, or do you expect actual blockchain-based systems to dominate? Like the Tethers and the USDCs.
I think you'll see a mix of both. Yeah. You're already starting to see a lot of new stablecoins get issued, and historically, the stablecoin market has largely been a duopoly between Tether and USDC Circle, which we helped co-found. And I think a lot of platforms now are saying, well, we have distribution, we want to vertically integrate, and we want to have their own stablecoin. And there's good reasons for that in a lot of instances. But the benefit of having a stablecoin with broad supply and distribution is it gives it utility. A dollar is only as good as the places where it's accepted. And so in order to have utility, it needs to be integrated into a variety of merchant acceptance platforms, banks, centralized exchanges, and there needs to be deep and robust liquidity so that you can exchange in and out of that stablecoin.
Yeah, shifting gears a bit to the exchange business. I know I've had a Coinbase account since 2016. I know that Coinbase is used by millions of people. But recently, you've been promoting yourselves as an everything exchange. Can you kind of walk me through what that means, and how do you incorporate these different technologies into this concept of an everything exchange?
Yeah, when we say the everything exchange, we mean that Coinbase will seek to provide access to our customers to buy and sell basically any financial asset that they want. And the reason for that shift recently is the convergence that we're seeing between traditional financial assets and crypto assets, which is enabled by tokenization. So historically, you had crypto native assets like Bitcoin and Ethereum and Solana. These only exist on blockchains. They're blockchain native. But we're increasingly seeing more payment stablecoins, tokenized money market funds, tokenized securities, tokenized equities, on-chain IPOs, and so these worlds are very much blurring, and we will seek to provide the safest, most compliant, and easiest to use platform for how customers can access all of those assets as they're issued on-chain.
Well, I think when we were talking a little backstage, you mentioned how there's a mantra about things are never as good as they seem or never as bad as they seem in the sector. And obviously, the last month has been very difficult for a lot of people in crypto. We saw that, October 10th, mass liquidation event that's kind of spooked the market. All because somebody misrepresented a tweet or misunderstood a particular comment. So can you kind of just walk me through what you're seeing on the exchange side, retail flows, institutional flows? How is Coinbase experiencing the current market? And we're technically still in a bull market, I guess. So how do those trends line up?
Yeah, sentiment changes quickly. So, you go from euphoria to the depths of the depths really quickly. You mentioned that saying, Brian, our CEO, always says to us, it's never as good as it seems, it's never as bad as it seems. It's honestly been a very helpful mantra, operating in the crypto space for 10 plus years. But what we see is there's certainly volatility, but there's sustained interest from institutions and corporations. And I think that that's driven by fundamentals where corporates see the potential for stablecoins to streamline how they do treasury management, how they accept payment from customers in countries all around the world. Large asset managers like BlackRock and Vanguard and Fidelity, et cetera, they see the potential for this technology to expand access to assets that historically have been reserved for the 1% or a very sophisticated group of people. And with the Echo acquisition that we did, we're first seeking to make it easier for crypto projects to raise money on chain and do so in a compliant manner across the globe. But that same technology and infrastructure is also applicable to securities tokens or other assets as they are tokenized. And so, we'll look to venture further into enabling things like on-chain IPOs, where you could have an issuer like Coinbase at one day that goes public on NASDAQ, but also simultaneously issues a security token on a public blockchain that people can buy and sell.
That's fascinating. So just overall, how do you really evaluate the market where we are now? I mean, as I was mentioning earlier about the liquidation we saw last month and the volatility, but if you actually look at the fundamentals, we've never been stronger. You have regulation on our side, you have corporates buying Bitcoin, you have nation states considering positive regulation around cryptocurrencies. How do you see the industry? What makes you most excited about the industry over the next 1 to 3 years?
I think that people have not fully factored in what the impact of having clear regulation is going to be on the space. Crypto has largely operated in an unofficial gray area since the space even got off the ground. And with clear rules, what I'm seeing now is a lot of founders are getting motivation and encouragement to actually start a business in crypto, to launch a token. Institutions, like I mentioned, are now seeing this not as something that's sort of off to the side, but core to their business strategy. And you mentioned some of those numbers from Citi. Right now we're sitting at $300 billion of stablecoin supply. So $300 billion to $4 trillion, that's significant growth that you can underwrite. And I think a lot of that, you don't have to squint too hard to see where that growth will come from now, because you have the right foundations in place.
Well, Shan, that's all the time we have. It was a pleasure, and looking forward to seeing what else is coming up on Coinbase. So appreciate it.
Thank you.